Hello and welcome to today's technical analysis. We're starting off with the common currency against the US dollar. So, yesterday we set in place a sideways moving channel where we had stated that in order for our hypothesis for this to be validated, it should test and then fail to break above R1. So, as you can see, it tested the upper bounds of the sideways moving channel yesterday and failed to break above and is currently retesting the channel. Now, note that the Bollinger Bands have narrowed and are within the sideways moving channel, yet it has not been retested at the bottom. So, following this break here, which we had noted yesterday, we see that the pair moved in a sideways fashion. Yet, breaking above the 50 RSI may imply a bullish sentiment. So, it's it's not certain that we will be moving in a sideways fashion as of yet, as it does appear to be gaining some momentum towards the upwards direction. Yet, should it fail to break above R1, then I would hold a sideways bias for the pair, given that it failed to break above R1 previously. And should it fail to break above R1 for a second time, we may see the pair moving lower. So, failing to break above R1, sideways bias, as long as it stays within the channel bounds of S1 and R1. Whereas, should it break above R1, then we may see the next target for the bulls being the R2 resistance line, which is 1.0805. Whereas, should it break below S1, we may see the pair moving in a bearish fashion towards S2. Yet, as you can see, it's currently testing the upper channel. So let's drop down into a 30-minute chart. Now, as we can see, let's see if we can find a different picture. Temporarily breaking above, but moving lower. So market correction having hit the top of the Bollinger Bands and the resistance, which validates our hypothesis. Should it fail to break for a second time, then we may see the pair moving again lower, as I had stated. So on the 1 hour chart, same picture, perhaps in a slightly upwards moving fashion, but it's a 1 hour chart. So as you can see, the wick, should I had formed an upward trend, I would have started from way back here and moved towards here. Yet the narrowing of the Bollinger Bands personally for me would mean that it may move in a sideways fashion. However, since we already have support and resistance, there appears no further need for a more technical analysis, I would say, given that we've already stated S1, S2, S3, and R1, R2, R3, validated from yesterday, so our support and resistance levels will remain the same. On a fundamental note, we note that the Eurozone's GDP revised figure for Q1 is expected today, where it is anticipated to decrease. Now, should that happen, we may see the euro dollar, reversing course and moving lower as the markets may anticipate a worsening of the EU economy. Moving on, let's see the cable. As you can see, yesterday's sideways moving channel was not validated. So our hypothesis is null. Broke above R1. So resistance now turns support, with the next potential target for the bulls being R2. So we switch. Resistance now turns support, 1.2465. Perhaps on a fundamental level, the discussion between US President Joe Biden and UK Prime Minister Rishi Sunak on terms of a trade deal may be providing some support for the pound. And why the pound and not the dollar? Well, the British economy is more dependent, I would say, on the US, seeing that it's sort of more or less failed to make significant deals in the EU. The UK needs this more than the US does. It's more important for the pound for this deal to be successful and provide benefits rather for rather than for the US dollar to reap the benefits. Hence, maybe the reason as to why the pound is gaining. Validated on a daily as well. Bounce on the 50 moving higher on the daily implies a strong bullish sentiment. And on the 4-hour chart, we note the double bounce breaking above bouncing again, which means I would hold a bullish outlook for the pair. So support, resistance, excuse me, now turns support. S2 becomes S3. R2 becomes R1. 3 becomes R2. So in the event, well, for our bullish outlook to continue, we would like to see the pair failing to break below S1 and moving towards R1, if not breaking R1 as well. So it would have to break R1 and then move towards R2 for our bullish hypothesis to be validated. Whereas for the bearish scenario, break below S2, not S1, as it is currently testing S1. So for a bearish outlook, breaking below S2, which would coincide with the breaking of the upwards moving trend line, with the next possible target for the bears being S3. So now let's place our R3 level. At a first glance, R3 might be placed here at the 1.2677 level. So at 65 pips, slightly too low for my taste. So let's go back. Having R3 at a higher level is simply too much. Yet that's the closest one we have. So R3 will be placed at 1.272675. It's a bit narrow. So the space between R3 and R2 is not as significant as I would like, yet this is what we have. So as you can see, for a bullish outlook to continue, breaking above R1, move towards R2, and the next resistance level would be at R3, 1.2675. Having bounced from the 50 RSI figure and moving higher, I would hold a bullish outlook for the pair. Now the yen. So today's yen's GDP rate for Q1 came in better than expected, so it's provided some support for the yen. As you can see, strengthening on the daily, yet not as significant as one would have expected. So coming in at around 230, barely 50 pips. So it's a double-edged sword in a sense that yes, Japan's GDP rate came in better than expected. So one would expect more support for the Japanese yen. Yet on the other hand, the better than expected GDP figures may mean that the bank is less likely to abandon its ultra loose monetary policy. Hence, a double edged sword where it should provide support for the yen, but it also provides support for the dollar against the yen due to these conflicting uh, arguments. However, it appears that it's moved back into a prior sideways moving channel, as we had noted before, which was support turned resistance at this point. and it's running along the RSI figure of 50. So, given the new data, we may see the pair moving in a sideways fashion up until the Fed's interest rate decision next week. However, I also note a downwards moving trend line. And in my own personal opinion, given the fundamentals and the recent statements by by the government of Japan, where it may be inclined to adopt a more different fiscal policy, which may pressure the BOJ in perhaps altering or adopting to the new circumstances, which may mean slightly easing of monetary policy, I would expect the Japanese yen to appreciate against the US dollar. Hence, I would maintain a bearish outlook for the pair, given that it's denominated in US dollars. So, bearish outlook, breaking below resistance turn support at R1 with the move towards S2. So for a bearish outlook, excuse me, it would not be enough just to break below the resistance and outturn support at 139.65. It would also have to move towards S1, which will now turn to S2. Whereas for a sideways motion, a sideways outlook, it would have to continue running along the figure of 50 and staying between the S1 and the R1 boundaries, as was previously indicated, staying within this channel. So S2 now becomes S3. And my R3 right about here. This for me would be an perhaps here. This for me would be my R3. So resistance at 143.80, rounded up. So adjusting S3, S2, and S1. R2 becomes R1. S3 becomes R3. So yesterday we stated breaking above. So it's now resistance turning support. So as a small recap, bearish outlook given that it's formed a downward trend line. We expect for our bearish outlook to continue the break below S1 and the move towards S2, if not breaking also S2. Whereas for a bullish outlook, breaking above R1. Yet we note that it's entered a previous sideways moving channel. So it should remain between S1 and R1, so failing to break above or below, it may move in a sideways fashion. Gold gold broke below our S1 of 1955 and it's currently moving towards S2. So as we noted here, it broke, well, yesterday it bounced off and then it broke below. So the breaking below implies a bearish sentiment within the market. So S1 will now return to resistance at R1. R2, R1 becomes R2. So given that there is still there is a less risk, I would say, for potential catastrophic events such as the US default, which was alleviated, so no concern. We may see gold moving to lower levels. Yet, one could argue that that's an upward trend line, and this is a downwards moving trend line. Personally, I would hold a bearish outlook, given that it broke below our S1 level and yet it's moving between the Bollinger Bands, which may imply a sideways motion. However, the break below here for me is indicative of a bearish scenario. Hence, for our bearish outlook to continue, breaking below S1 at 1935 and move towards S2 at 1910. And we maintain support now turn resistance, prior resistance, and now we aim to find our support at S3. So from a first glance, our S3 could be placed here. S3 could be placed at 1885. So this would be my S3. Pretty easygoing day today. Nothing too major except the Eurozone GDP rates. Tomorrow will be interesting for Chinese yuan traders with China's PPI figures coming out and CPI. So that may be interesting to watch out for. During today's session, except the Eurozone's revised GDP for Q1, nothing too major except a few releases by the Fed in terms of the impact on household spending, which is not anticipated to be a market mover, yet may provide some helpful insight as to how the US consumer is doing actually. So maintaining a bearish outlook, having broken below support now turn resistance, yet for a bullish outlook, break above R1 and breaking above the downward trend line with a move towards R2, yet for a bearish outlook to continue, breaking below S1 and a move towards S2. The Dow Jones continuing. As a matter of fact, the Dow Jones went up, potentially a market correction. As you can see, our old levels still stand, fluctuating around R1 with a small adjustment here. So 33,705. R1. Despite it testing R1 once again and remaining above the RSI figure of 50, which implies a bullish sentiment within the market, we're seeing that the Bollinger Bands are narrowing. So should it fail to break R1, I would not be surprised if it moved towards S1 at 33,190, with the next potential move for the target for the bears being the S2 at 32,330. Whereas for a bullish outlook, it would have to break above R2, not just R1. It would have to break above R2, as it is currently testing R1. Hence, for a bullish outlook, breaking above R2 and a move towards R3. However, our level seems to be verified once again. The S&P 500. Our prior support and resistance levels still stand. Not particularly surprised. Let's move on to the daily. Appears to be moving in a, I'd say, sideways fashion. Just notice how the open and close stay between. They're near the 2 days open and close as well, despite moving slightly lower. It ended on the close of 2 days ago. So it might be moving in a sideways fashion. Just note how it touched beautifully our S1 at 4,260 and bounced off. So, and it's running along the figure of 50. Failed to break above 70 for a bullish outlook and is running along the 50. Failing to break below S1, yet appears not to have enough momentum to break above R1 as of now. We may see a sideways channel being formed. Yet, for a sideways moving channel to be formed between these two levels, it would have to move towards R1 and fail to break above R1. However, I would still maintain a neutral outlook for the S&P 500, given that it's failed to break up below S1 and the Bollinger Bands have significantly narrowed, implying low market volatility, so the potential for moving in a sideways fashion. R1, R2, R3, and S1, S2, S3 remain the same. We've stated these before, and they do not seem to have been broken, so validating our hypotheses and our support and resistance levels. The Nasdaq, on the other hand, sharp decline, market retracement lower. Note how we noted this yesterday. Failing to break above 70, shift towards a bear sentiment, breaking below the sideways moving, the aforementioned sideways moving channel. And look how just beautifully tested our support at S2. Right on the dot as well. Slight wick below our S2, but it's validated our support line at S2. It's failing to break. Well, it failed to break below S2. However, given this move, I would not be surprised if it tried to test support now turned resistance at 14,465. So this now turns to R1. But do note that we had mentioned this yesterday. So it's validating our support and resistance lines. So R1 now becomes R2. R2 becomes R3. For the Nasdaq, not surprised. It appears that it was overbought. The hype from Nvidia and Apple just seemed to go on forever, way above market value, which made it due for a potential market correction lower, as is occurring as of now. Hence, I would maintain a bearish outlook for the Nasdaq 100. But for our bearish outlook to continue, breaking below S2 and the move towards S3. Note that we do not require the breaking of S2 as of S3 as well, yet simply now S1. So our hypothesis is validated once again regards to support and resistance levels. And this would be my S3, my new S3. So S3 would be at 13,430. So this becomes S3. So we're seeing a consistency in our charts. We're seeing a consistency of support and resistance levels being tested, being validated once again. So we're just simply adding either a new support or a new resistance and just switching support and resistance or resistance and support, and we move on. The breaking here, so I would expect with the price action moving higher, slightly higher to test R1, that the RSI indicator will also move towards 50 before breaking lower and moving towards S2. Oil, oil support and resistance levels, as you can see, the double bounce here moved higher, double bounce as well is moving higher, implying a bullish sentiment within the market. So let's just point this out here. I would hold a bullish outlook for oil. Upwards moving trend line. So what I might do would bring my S3 higher, given the price action higher. But given that it's currently testing new support at S3, which is validated previously as well, yes. For a bearish outlook, it would have to break S1, which will now turn to S2. So let's just set this up so it can be a bit slightly clearer. So S2 becomes S1, excuse me, becomes S2, and S2 becomes S3. Resistance, resistance R1, 2, and 3 will remain the same. So as you can see, this was S1 and it failed to break below S1, moved higher, validating now S2. So for a bearish outlook to occur, I would require a clear break below S2, not simply S1, as it is currently testing S1. It's too narrow and too close to R1. So for a bearish outlook, break below the upwards moving trend line and a break below S2, with the next target being S3. Whereas for a bullish outlook to continue, breaking above R1, with the next potential target being at R2 at 75.66. Now, the continued demand side worries for oil may be weighing on oil's price, yet should indications of a more recovery, of a global recovery, be expedited, so to speak, we may see demand for oil increasing, hence the price going up. However, it appears that the oil production cuts by Saudi seem to have had little effect. On the daily, slightly down, but moved higher yesterday. And Apple. Let's zoom in. If you remember from yesterday's live technical analysis session together, it's testing S1. We had noted this previously to be validated. Yet I would hold a bearish outlook for Apple should break below S1 and S2, with the next target being S3. Whereas for a bullish outlook, breaking above R1, move towards R2. For the Aussie is currently testing R1 at 0.6690, trying to fail to break above here, and is currently moving slightly lower, but I would anticipate this to continue moving in an upwards fashion, despite breaking above the breaking below the upwards moving trend line. It does not appear as significant as it corrected at the mid-range of the Bollinger Bands, and the RSI figure is still above 50, implying a bullish sentiment within the market. Hence, break above R1 and move towards R2. Whereas for a bearish outlook, break below S1, with the next target being S2. What would be interesting would be to drop down into the 30-minute chart. On the 30-minute chart, the price action touched to the pip. Validating our resistance line on the 30-minute chart, on the hourly and the 4-hour. So R1 has been validated as a resistance point once again. Nothing too major. R1, R2, and R3 remain the same. Yet a case could be made for bringing S1 slightly higher, perhaps at 0.66, 0.6610. I'm probably going to keep S2 at the same level, as it's just slightly higher. So for a bearish outlook, breaking below S1. For a bullish outlook, breaking above R1. Next target being R2. As for a bearish outlook, break above below S1, move towards S2. Now, the Turkish lira. Now, President Tayyip Erdogan's economic policies appear to be remaining as is. Unorthodox, but note the beautiful touch on R1 at 23.20. Once, twice, three, and the fourth time. So we still maintain a bullish outlook for the dollar against the Turkish lira, with the next potential target being the $24 big figure mark. An upward trend line at this point is unnecessary. It just moves higher and higher. So we just stay with S1, S2, and S3, and we maintain a bullish outlook for the pair. And that's it for today. Thank you, and until next time.
Everyone, welcome to another of our informative videos. Today we're going to look at balance and equity. Balance is the starting balance of your account. It basically refers to the amount of money you have in your trading account. If you deposit $1,000, your balance will be $1,000. If you open a new position, your account balance will not change until you close the position. Your balance does not include any profits or losses you might have from any open positions. If you have open positions, your balance amount depends on the losses or gains you've made once you close your trade. So basically, your balance will only change when you add more funds to your account, or when you close a position, or when you keep a position open overnight and either receive or pay swap fee. The balance amount is shown in the MT4 terminal window below the Trade tab on your MT4 client terminal. Let's also take a look at equity. Equity represents the current value of your trading account and fluctuates with every tick when looking at a trading platform on your screen. It is the sum of your account balance and all floating profits or losses from your open positions. In other words, equity refers to your balance plus any profit or loss from open positions. However, if you don't have any open positions, then your balance will be equal to your equity. Then equity amount is shown in the MT4 terminal window below the Trade tab on your client terminal. Your equity continuously fluctuates with the current market prices as long as you have open positions. As your current trades go up or down in value, your equity does the same. Thank you for watching.
Okay, thank you. Okay, cool. So I was just about to get to the disclaimer and I see more of you joining. Disclaimer. Any information that we share in this webinar should not be construed as trading advice or investment advice. Okay, this is purely educational only. These webinars are brought to you by IronFX to help you guys grow your grow in trading. This material is just for personal opinion of the author and the client's investment objective, and risk tolerance have not been considered. Okay, so please be cautious, especially if you are new to trading. Okay, cool. I'm going to start the webinar proper. Okay, let's start by letting me introduce myself. My name is Cassandra, or you guys can call me Cass. I am a trade analyst and a prop trader at Everest Fortune Group. Okay, so Everest Fortune Group is an award-winning research firm. Okay, we advise brokerages, banks. We do podcasts, we do radio. Basically, we do a lot of research on the financial markets, and we specialize in technical analysis. So we are the finalists for the best Forex research and best equity research for 2019, 2020, 2021, and 2022 is not out yet. Okay, so we are the finalists for years in a row. You guys are in good hands. Okay, that's why IronFX brought us in to do this webinars for you guys. Okay, another thing about myself in terms of trading, I want to share my experience with you guys. So I've been trading for a few years now, and I think the most memorable or important achievement that I've done in trading is that I have passed my Forex fund and FTMO for a total number of 6 times. Okay, for those who don't know what these are prop trading tests. These prop trading tests requires a trader to be in profit of 8 to 10% within a month. Okay, so within 1 month, you need to bring in a profit of 8 to 10%. Hey, Carlos, welcome to our webinar. Okay, 8 to 10% consistently without a drawdown of 5% to pass the test. So I've passed this test 6 times, and I am currently taking test number 7. Hopefully, I pass test number 7 as well. Okay, so whatever I share with you guys is basically my style of trading, however I trade and how I get my 8 to 10% within the month. Okay, I'm not sharing anything that I don't use. Okay, so again, don't be shy, ask if you are confused. Okay, so agenda for today, we've got what are trend lines? What do you use trend lines? How do you use trend lines effectively? What time frame do you use trend lines on? And how do you use channels? And let's put them into a strategy. Okay, so once we cover the topic for today, which is basically trend lines and channels, okay, we are going to move on to trading view if we have time, of course. I mean, most of the time we do have time. We're going to move into trading view, and I will show you exactly how to apply whatever we learned today, because learning is one thing, but knowing how to apply is a totally different thing. Okay, so let's start with what are trend lines. Can you guys let me know in the chat box if you guys have ever used trend lines before, and if this trend line is familiar to you? Okay, we've got some answers coming in. Yes, you used trend line before. This is a downwards trend line. Okay, this looks, I have another question. The question is this trend line drawn properly? For those who have used a trend line before, is this trend line drawn properly? Okay, that's right. Okay, this trend line is not drawn properly because why? This is a descending trend line. A descending trend line should be drawn on top, and an ascending trend line, which is a trend line that is going up, should be drawn at the bottom. Okay, so this is drawn at the bottom of a descending trend line. This is not the best way to draw a trend line. This is not the way I would do it. Okay, so let's move on. I'll eventually show you the correct way. So a trend line on the minimal, okay, on a minimal needs 3 touches. Okay, so 1, 2, 3, 4, 5, 6. 6 touches in this example. But on a minimal, when you are plotting your trend line, it needs to have at least 3 touches. If it's less than 3 touches, it is not a valid trend line, and you should not be using that as a guide or a reference. Okay, on a minimal, it should be at least 3 touches. Okay, so the next question is, how do we plot a trend line? Is it with the wick or without the wick? By the way, the whole point of a trend line is to tell you where trend is going. It's either uptrend or downtrend. That's basically it. It's basically an uptrend or a downtrend. Okay. We will be going to the trading. We will be going to trading view. We'll be going to different charts, and we'll be identifying trends. Okay, whenever we cover a topic, I want to practice, spend more time practicing, because I think it's so important. Like, we can learn about trend lines, we can learn about channels, but if you don't know how to spot it on the charts, your today's session will still not be that helpful to you. Okay, so wick or no wick, it doesn't matter. You can use the body of the candle here, or you can use the wick as a reference. Okay, here at Everyone's Fortune Group, we try, okay? It's not every time, but we try to use wick to wick to wick, okay? And I'll show you why later when we go to trading view. Okay, so why we use, what time frame do you use trend lines on? Can you guys let me know what time frames do you guys usually use your trend line on? Okay, 1 hour, 4 hours daily. Okay, there's no right or wrong answers here. Why? Because you can use the trend line on all time frames. Okay, so you can use the trend line on all time frames. Okay, so in this case, we're using it. This is what it looks like on the 30 minutes, and this is what it will look like on the 15 minutes. Okay, so that's why when we are plotting the trend line, we try to take the highest point of the wick we try, okay, sometimes the chart won't allow us. We try to take the highest point of the wick. Why? So that when we go to different time frames, we can see that it is touching the highest end of the wick as well, and your trend line is still valid on those time frames. Okay, so let's recap a little before I move into channel. Today's topic is very short. Okay, don't worry. It is a short topic, but more importantly, it's later when we move into TradingView to do the practice. Okay, to do the practice. I think it'll be helpful if you guys interact with the practice session, because it will really help you a lot in identifying the trend line. Okay, so let's go through what we have just learned about the trend line. Number one, what is a trend line for? The trend line is used to identify trend. So it's either uptrend or a downtrend. That's the only two things. You are using trend line to identify uptrend or downtrend. Okay, that's the only thing you are looking for. Number two, the trend line, when it is descending, should be drawn at the top. Okay, when it is ascending, it should be drawn at the bottom. Okay, so this is the correct way to draw a trend line. It should be drawn at the top. Why should it be drawn at the top? I will show you guys later when we move into TradingView. Okay, but these are the rules that you need to remember. Okay, so trend line is a very simple topic, but there are rules to every technical analysis. There's always rules, like how can you use something, okay? There's rules. So these are the rules you need to remember. It needs to be drawn in the correct direction. Okay, number three, it needs to have minimally 3 touches. 1, 2, 3, 4. This is valid. 1, 2, 3. This one didn't really touch, but we can kind of consider it. 4, 5. Okay, 5 touches. This is valid. Okay, so the 3 things that we learn. Trend is to identify downtrend, uptrend. It has to have 3 touches, and it needs to be drawn correctly. Okay, so far that's all we learned. The 4th thing, it's not really that important, but it's just good to keep it in your mind. It can be used on all time frames. Okay, any questions so far? It's very simple, right? Everyone's good with trend lines, right? Okay, thank you so much. Okay, cool. We're gonna move on to channels. Okay, so how do you use a channel? A channel is kind of like a trend line, except the channel is both on top and at the bottom. Okay, so the channel is usually parallel. That means it's the same angle. It's drawn the same angle. I will show you when we go to TradingView how to pull out your trend line. I'll show you how to pull out your channel. Okay, so the only rule, the rules for a channel is simple. It needs to have 4 touches, 2 on top, 2 at the bottom. So it needs to touch the resistance 2 times. It needs to touch the support 2 times. In this case, we can see it touched here. This one didn't really touch, but depending on how you adjust this channel, this here would touch. Okay, so 1 touch here, 2 touch, 1 touch here, 2 touch. This is a valid channel. It needs to have 2 touch on top, 2 touch at the bottom, and it is a valid channel. It needs to have 4 touches. Okay, the channel is same as the trend line. It is to tell you trend, whether it's going up or whether it's going down. Okay, the only difference with the channel is that you narrow down. Okay, you narrow down where you think price is going to go. Okay, so that means when we plot a channel, we think price is going to move within this channel. Okay, we think, hey Mark, welcome to our webinar. Hey, sorry, let me adjust this. Okay, we think that price is going to move within the channel. So that's the only difference with a channel and a trend line. A channel narrows down where you think price is going to move. Okay. Okay, so putting them into a strategy, you can actually combine both the channel and the trend line together. You first plot a trend line. and then you plot a channel so that it narrows down. The channel will help you narrow down where you think price is going. That's how you combine both of it, and that's where you look for your buy, your sell, your take profit, your entry. Okay. Don't worry if you are confused. We will be going to TradingView to understand this better. Break and retest strategy. Okay, so this is an ascending trend line. You can see price breaking, retest. Usually a trader will get in here for the retest and then they get in for the sell. Okay. Another example, this is a triangle strategy where it is a trend line on the upside and the downside. You can see that the triangle broke at the bottom, retest, and then here you enter for a sell. Okay, so that's all I have for trend lines and channels. We are going to go into TradingView now to practice identifying trend lines and channels, and I hope you guys are a bit more interactive so that I know if you guys are following, I know if you guys are getting the correct idea or not. Okay, so I'm gonna go to TradingView now. If you guys have questions, don't be shy. Please ask. Okay, the whole point of this webinar is to help you guys master technical analysis. I want to make sure you guys get technical analysis right, of course. Okay. Oh, what happened to my TradingView? Okay, never mind all this. I think I accidentally closed TradingView. Okay, everyone can see my screen, right? Okay, everyone can see my screen. I'm moving my mouse to see if it's working. You are sharing this screen. Okay, cool. Cool, everyone can see. That's the most important thing. Okay, so this is a setup that I found today. Okay, so this is one setup that I found today using Trendline. Okay, so I will show you guys how exactly did I find this setup. Okay, so first of all, I realized there was a trend line here. Okay, do you guys see this ascending trend line? Okay. I realized there was a break of that trend line. Okay, whenever there's a break of something, I need to confirm it. Okay, so I pull out things like Ichimoku. Ichimoku is an indicator that helps with trend. Okay, so I pull out an indicator that is used for trend identification. Okay, so I'm going to pull out Ichimoku. And true enough, Ichimoku breaks the cloud as well. Price breaks the Ichimoku cloud. So this is double confirmation for me that trend is reverting and I should be entering for a sell. So using Trendline, you will be able to find setups. You'll be able to find your entry, your stop loss, your take profit. Okay. Okay, just give me a moment, guys. I think the screen sharing has a problem. It keeps. Okay, is it better? Okay, let me try to screen share again. Sorry. It just keeps saying that my screen sharing is paused. I don't know why. Share screen. Just give me a minute to figure this out. I don't know what's going on. I don't know why. Okay, guys, I need to turn off. Just give me a minute. Okay, I think should be okay now. Everyone can see my screen again? Sorry, the screen, Zoom keeps saying that my screen is not sharing. Okay, so I think it's sharing now. You should be able to see GBP CAD. Okay, so I'm gonna show you guys, this is a practice session. So I'm gonna show you guys how to identify trend. Okay, we're gonna identify trend line. So we're gonna get rid of this. We're gonna start with a clean slate. Okay, I already gave you the answers to this one, so you already know that price is moving in an uptrend. Okay, and this is how you draw the trend line. Okay, there's two ways to draw this trend line actually. A trend line needs to have at least 3 touches. Okay, so in this case, 1 touch here, 2 touch here, 3 touch here, 4 touch here, and then the breakout on the 5th touch. Okay, so this is a valid trend line. Okay, this is how you identify trend. And if you pay attention, you will be able to see a channel as well. You guys see the channel? Depending on how I draw the channel, it can touch even more times. Okay, so a channel, can you guys let me know in the chat box? I just want to make sure you guys are still following and still understanding what I'm saying. Do you remember for a channel, how many touches does it have to be? Okay, thank you. Thank you, Brian. Yes, so a channel, you would need 2 touches at the bottom, 2 touches at the top. Okay. So in this case, you've got 1, we'll consider it barely touched, 3, 4, and 1, 2, 3, 4 touches. Okay, so this is a valid channel. Okay, and we can see price broke the channel and it came and retest a channel, and here you will enter for a sell. Okay, I'm not going to show you guys too in depth. The whole point of today's webinar is to identify channels and trend lines. Okay, so I'm going to delete all this. We're going to go into a different chart. Okay, so it works the same for all chart. It works for Forex, it works for commodities, it works for index, it works for cryptocurrency. Channels and trend line works for all kinds of instruments. Okay, so let me delete this. Let's try gold, for example. Okay, I'm going to get rid of this. Can you guys let me know if you see a channel or a trend line in XAU USD 4 hours time frame, and is it going up or down? I just need a little bit of interaction so I know that you guys are still following me. Okay, it's going up. Okay, it's going up. There is a channel and there's also a trend line. Okay, so thank you, Brian, again. There is a ascending trend line here. Okay, so there is 1, 2, 3, and 4 touches. This is a valid trend line. Okay, on top of that, there is a channel here. You plot your channel here. Okay, for those who are still a little confused, where do you find your channel? You go to this cross. Under the cross, you click on trend line tools. You click on parallel channel and you can use the channel function. Okay, if you want a trend line, it is the first one here. Okay, so for a channel, remember we need 2 touches on top, 2 at the bottom. We've got 2 on top, 1, 2, and 1, 2, 3, 4 touches here. Okay, that means this is a valid channel, and that means we expect price to continue moving within this channel. Okay, that is the whole point of identifying a channel or a trend line to begin with. The whole point is to narrow down where you think price is going. Okay, any questions so far? We're going to go practice on a different chart. Okay, let's try BTC. Okay, so this market is kind of moving sideways. Actually, I do kind of see a slight triangle here. You see the triangle. Price is kind of moving within a triangle. Okay, this is not the best. Whenever I'm plotting a triangle, I would like to have 3 touches. So in this case, there's only 2, 1, 2, and 1 and 2. Okay, I think for a triangle, it's best to have 3 touches. But in this case, there's only 2, so we shouldn't consider this triangle too much. Let's try a different pair. Let's try USD JPY. Okay, I don't see a triangle here, but I do see a channel. Oh, what's going on? Oh, what's going on? Okay, let me refresh. Okay, let's try EUR/USD. You need to, whenever you're drawing a channel or a trend line, you always need to ask yourself the first question. Okay, question number 1, is it going on an uptrend or a downtrend? Okay, if you answer uptrend or downtrend, you would have won half the battle already. Okay, so in this case, when I look at EUR/USD, I immediately see an uptrend. Why is there uptrend? Because price is moving, making higher highs and higher lows. Okay, so this is definitely moving in an uptrend. Okay, so once I have identified whether it is uptrend or downtrend, I can now draw my channel or my trend line. Okay, so I'm going to try to draw a trend line. Remember, a trend line, 3 touches. Okay, this one barely touch, but I will consider it. Okay, so 1 touch, 2 touch, barely touch, I think we can consider, and this is the 3rd touch where price is currently at right now. If you can't draw a trend line, do not force it. Okay, if there is no 3 touches, do not force it. Like that one just now feels like it was a bit forced, right? Okay, don't worry about it. You just need to readjust or draw it differently, see if you can draw it differently. Okay, so now that I draw it differently, this is a bit more valid to me. There's 1 touch here, 2 touch here, 3 touch here, 4 touch here, and then on the 5th touch, it breaks out. Okay, it breaks out. Okay, so if I pull out a channel, I'm going to try my best to plot a channel. If I can. Okay, so this is the channel that I can come up with. That means I have a bias that price is going to move in this channel. Okay, so this channel has 2 touches at the bottom and 2 touches on top, making it a valid channel. Okay, remember, it just has to have 2 on top, 2 at the bottom. Even if we just pull it out a little, it will have 3 touches. Okay, so see, 1, this one barely touched, but that's okay. It's really how you adjust it. a lot of times with a channel and a trend line, it's really how you adjust it. Okay. Don't worry so much about it, but the whole point is as long as it's not cutting through a lot of body, that's fine. Okay, so 1 touch here, 2 touches here, 1 touch here, and the second touch. Okay, so this is a valid channel, and we think that price will move within this channel. Okay, cool. Now that I have identified my trend and my channel, I am now, everyone good with the practice session? Should I move on already? Or do we need to practice on more charts? Can you guys let me know in the Q&A box or the chat box, or give me a thumbs up or something? Should I move on already, or should we practice looking for more channels and trend lines? Okay, we can move on. Okay. Okay, so after I find my trend, okay, I'm now going to show you guys how to combine technical analysis, okay? Sorry, it's a little warm here. Okay, so now that I found my trend, the next thing I'm going to do is look for support and resistance. We are now going to combine whatever we learned today with our normal style of looking for a setup, okay? So we always want to identify support and resistance by looking for the closest swing high and the closest swing low. So the closest swing high I can find is here, and the closest swing low I can find is here. Okay, and this swing low will connect nicely with this area, this swing high here, and this swing high here. Okay, so I would say this is a significant area of support. Okay, everyone good for now? Okay, now that I have identified my support and resistance, I'm going to mark it clearly. I'm going to mark this very clearly. Okay, so there's one way you can mark it. You can double click, go into text, and you can type first resistance or your resistance, whatever you want to type. Okay, as long as it identifies that resistance. And I usually put it as red color. So in my mind, I know that red means resistance, green means support. Okay, so I'm going to go into here. I'm going to type first support. I'm going to change this to green. Okay. So that I know that this is my support resistance. It is super important to keep your charts clean. Okay, so when you look at your charts have to be clean at all time, clean and tidy, and it shouldn't be messy. Okay, it should be clean and tidy at all times so that you don't get confused. Okay, so that you yourself don't get confused. Okay, so one more thing I do notice is that there is a smaller channel here. Okay, I'm going to bring that in because this may be a possible movement for EUR/USD. Okay, do you see that there is a smaller channel moving here? Okay, I'm going to get rid of this and we're going to focus on the smaller channel here. Okay. Okay, cool. Now that we have found, so from all the information that we have found, now the whole point is just to collect data and then make a decision from data. So what information have we collected? Number one. Okay, number one, the first data that we've collected is that price is moving in an uptrend. Okay, why? Because of the channel. Okay, so when price is moving up, should you be buying or should you be selling? Can you guys let me know in the chat box or the Q&A box? If price is moving up, do you want to enter for a buy or do you want to enter for a sell? Okay, thank you. Thank you, Aisha. Thank you, Bri. Thank you, Joash. Thank you, Mohammed. That's right. You want to enter for a buy. Why? Because you want to follow trend. So it's the same. If you go to the beach, if the waves is pushing you this way, you want to follow the waves. You don't want to go against the wave because going against the wave is going against momentum, right? So I'm not saying that if price is going in uptrend, you cannot sell. You can still sell, you know. You can enter here for a sell. You can take profit here. You can. But it is safer. It is safer if you follow the trend. Okay, it is safer if you follow the trend. Okay, so we have identified that price is moving an uptrend. We have identified the support and resistance. This support and resistance will now act as your take profit and your entry. So this resistance is where you think price is going to go to next. Why? Because price is very attracted to support and resistance. Support and resistance are like key levels. Okay, it's like a magnet. So you just have to think about it as a magnet. You have to think of price as a magnet. It is always attracted to the support and resistance. So depending on the momentum, if the bullish momentum is strong, then obviously it will be attracted to the first resistance. If the bullish momentum is not strong, if the bearish momentum is strong, then obviously it will go to the first support. Okay. So usually what price does is it does this, okay? It moves in waves. It's moving in waves. Okay, every time it moves in wave, it breaks, it comes back and retests. Okay, do you realize that price keeps coming back to this aim area? Price keeps coming back to this support area. It has come back to this support area 5 times already. 1, 2, 3, 4, 5. Why? Because like a magnet, price is attracted to this first support area. It is attracted, it has come to this first resistance area 2 times already. 1, 2. Okay, it is attracted to the support and resistance. And that therefore, your support and resistance will act as number 1, either your entry, okay, or your take profit. Okay. Never put your stop loss at support and resistance, because if price is attracted to the support and resistance, that means it will go to your stop loss because it is attracted to that area, right? So it should always be your entry or your take profit. That means when price comes here, it might bounce off, and here you enter for a buy, okay? Or when it reach here, it might reverse. Okay, here you enter for a sell. Okay, that's why identifying support and resistance is super, super, super important in trading. I know a trader who only used support and resistance. I think he used other things as well. Okay, 90% or 80% of his strategy is using support and resistance. On a monthly basis, he makes more than 100,000 US dollars. Okay, just using support and resistance. So identifying support resistance is super, super, super crucial in trading. Okay, this is, if one thing you want to master in trading, it is identifying support resistance. You need to train your eyes to see where's the support, where's the resistance, where is the best support, where's the best resistance. Okay, that is super important. Okay, now that we have identified our trend, we have identified support resistance, I am now going to teach you guys to combine Fibonacci levels. Okay, if you are new here, this is going to be a bit confusing for you. Okay, if you are not, if it's confusing for you, don't worry, just try your best to just listen and follow through this. After practicing a few times, after many, many times of practice, you will be very used to what I'm trying to tell you, okay? Okay, so I'm going to use Fibonacci levels to see how strong this support is, okay? After I've identified support resistance, I need to measure the strength of the support resistance. Why? Okay, why? I know that price is attracted to the support and resistance. It will either go to the support or it will either go to the resistance. Okay, I'm not sure yet. Okay, I know it is attracted. The question is, when it reach the support, is it going to break or is it going to bounce? That is the question. That is the next question. Okay, because if it's going to break, I will enter for a sell. If it's going to bounce, I will enter for a buy. Okay, that's why I say your support and resistance will always act as your entry and your take profit. Okay, it will either be your entry or your take profit. Okay, but you need to first identify the support and resistance. Okay, so how do I measure the strength of the first support? I use Fibonacci. Go to this one, the third one, 2 under the cross, Fibonacci retracement. I'm going to plot some Fibonacci levels and see if there are any levels that lines up at the first resistance. So a very, very strong support and resistance will have a lot of Fibonacci levels lining up in the exact same area or zone. Okay, so we can see that the 38.2 is super near to our first resistance, which is telling us that, okay, there is some strength in this first support. I would much prefer if the levels line up just on top of the first support, but it doesn't work like that all the time. So let's see. Okay, I'm gonna get rid of these levels. I'm gonna get rid of all the levels that are not relevant to us. Okay, so 0 is not relevant to us right now. 100 is not relevant. Only 38.2 is relevant because it is nearest to our first support. So I'm going to get rid of everything else that's not relevant so that our chart looks clean and tidy. I always want the chart to be clean and tidy. Okay. Okay, now I'm going to look for Fibonacci projection. Okay, very good. I see 100% Fibonacci projection lining up exactly on top of the first support. I'm going to get rid of the 0. I'm going to get rid of the 61.8. I'm going to get rid of the 78.6. I'm going to press OK. Then we can see that, yes, definitely at the first support area, there is strength. There is resistance at the first support. That means when price gets here, okay, you must be wondering why price can get there if that means you have to come up from the channel. But you can take note that this channel should only be used as a reference, okay? You should only use it as a reference. Okay, this channel could have been drawn this way as well. Okay, it could be drawn this way as well. Price can come here, reverse, and this channel will still be valid. Okay, so that's why channel should only be used as a reference to finding trend. Okay, you shouldn't be too obsessed with like the lines of the channel. Be like, oh no, price cannot come here, because if price comes here, then this channel is not valid anymore because price would have broken this channel. Okay, no. Okay, it is just a guide of where you think price is moving to. Okay, so I think price is gonna come here, bounce off here, and come back to the first resistance. Okay, that's what I think is going to happen. That's what I think is going to happen. Okay, so why? Because I've identified that there's a support here. The support lines up nicely with this 100% Fibonacci projection. It lines up nicely with this 38.2 Fibonacci retracement. Not perfectly, but at least it's nearby. Okay. What else do I see? Okay, let me pull out indicator. Okay, it would line up nicely with the support of this Ichimoku cloud. Okay, so the cloud of the Ichimoku works as a support and a resistance as well. So it can come here, bounce off, and continue up. Okay, so everything looks like it's lining up perfectly. I'm a bit biased for this buy for EUR USD. Okay, because of this, I am very biased to get in for a buy for EUR USD. Okay, that's exactly how you would use a channel and a trend line to help you identify where to get in. Okay, what about stop loss? Okay, where would I put my stop loss? I would put my stop loss here, just below this area, okay? Because this is the area. Okay, I'm gonna get rid of the Ichimoku so that it's not confusing. This is the area where I think price is gonna reverse off, right? Okay, so this is the area of support. That means this is the area that price is attracted to. That's where the magnet is, okay? So I want to avoid this magnetic area. I want to go down slightly. So I'll put my stop loss here so that when price gets here, it comes here, it reverses, it misses the stop loss and it goes up, okay? If I am wrong, if price doesn't reverse here, instead price does a breakout, it breaks out, then it will hit my stop loss, and that's okay. It's okay to hit my stop loss. Okay, that's the whole point of a stop loss. The stop loss is to protect you when you are wrong. Okay, that's all that it is. Okay, so I'm gonna put this as stop loss, buy entry, take profit. Okay, so this is exactly my analysis for EUR USD. Okay, this will be my analysis for EUR USD. If I'm wrong, it'll hit my stop loss, and that's totally fine. If I'm correct, it'll hit my take profit, and I would have made okay, because I'm always risking 1%, I am only risking 1%. Okay, if I'm wrong, it'll hit my stop loss and I lose 1% of my entire account size. Let's say my account is $100,000. Okay, I lose $1,000 maximum. That's the most I can lose. Okay, but if I win 2.71%. Okay, so I'm risking $1,000 to make $2,710. Okay, so I think the risk to reward is good. I think it is worth it. I think this is a trade that is okay to be taken. Okay, so what's the next step? Next step is once you have found your analysis, right? Once you have found your analysis, the next step is that when price gets here, okay, when price gets here, what you're gonna do is to look for reversal pattern candlestick. Okay, a reversal pattern candlestick. When price gets to this area, usually, not all the time, but usually a reversal pattern candlestick will appear, and that is your confirmation to get in for the buy. Okay, if it does not appear, do not get in for the buy. Okay, so what does a reversal pattern candlestick look like? These are some of it. We have the hammer, the hanging man, the bullish engulfing, bearish engulfing, piercing line, dark cloud, inverted hammer, shooting star, morning star, evening star. Okay, you will see, if you see just any one of this, just any one of this, you can enter for your buy. Okay, that's exactly how you make money in trading. Okay, this is how you will be profitable in trading, by following a set fixed rules. Okay, everyone okay for now? Okay, I have 10 more minutes with you guys. I am just going to look at one more chart and then we're gonna call it a day. Okay, so let's look at, I do want to look at GBP CAD, but it looks like price is already on its way. Yeah, price is on its way to the take profit. Okay, let's look at AUD CAD. Okay. Give me a moment. I'll tell you why I'm entering for a sell for this. Trend line breakout. Okay, kind of like a forming channel there. Okay, cool. There is kind of like a slight downtrend. There is a slight downtrend here. Okay, so I do think that price is going to go down. It's just that I think there's going to be two entries for the sell. Sell. Okay, the first entry I think it's going to be here. It's going to be this range. Okay, but this is a very huge range. But I do think this is the sell entry for AUD CAD. Okay. So I was talking to you guys about reversal pattern candlesticks a while ago, and I do see price kind of forming a reversal pattern candlestick already. Okay, I do see that price is kind of forming like a I want to say this one. Okay, so it's kind of forming like a spinning bottom, which is a kind of reversal pattern candlesticks or kind of uncertainty candlestick. So if this candle closes like this, okay, I would think this area is a good entry for the sell. Okay, let me just back this up with. Okay, there was a trend line breakout recently. Okay, so there is some bearish momentum. We can see that there is bearish momentum here. Okay, we see bearish momentum because there was a trend line here and price broke out of that trend line. Okay, we see another trend line here, kind of moving in a downwards. Okay, so I do think that there is bearish momentum and bearish pressure right now. I do think this sell is possible. We just need to wait for this candle to close. If this candle closes like this, I think it's a good sign to enter for a sell, okay, within this zone. Okay, so I think this is a good selling opportunity for AUD CAD. Okay, any questions? Anyone still confused or any questions at all? What other indicators? Okay, so I've got a question here asking what other indicators can I use to identify trend? Okay, so one other indicator that I use, I love to use Ichimoku. Okay, so I'm going to show you guys how to use Ichimoku. I'm going to delete this. I'm going to delete, turn off some of the settings so that it's not so messy. Okay, the only important thing that I like to look at for Ichimoku is number one, the plot background, which is a cloud. Okay, if you get rid of the plot background, you won't see the cloud. So you need to click on the plot background, and I like to use the conversion and the baseline. Okay, so there's two rules that I follow with Ichimoku. Number one, if price is moving above, just give me a moment. Okay, if price is moving above the Ichimoku cloud, like this, it means it's on an uptrend. Okay, if price is moving below the cloud, it means it's on a downtrend. Okay, so based on Ichimoku, it's already showing that price just broke the cloud and there might be bearish momentum. Okay. Okay, the second thing you want to look out for Ichimoku. If this baseline, okay, the conversion line, which is this blue line, okay, so one of it is called the conversion line and one of it is called the baseline. If the blue line is below the red line, it means that it's a sell. Okay. If the blue line is above the red line, like in this example here, it means that it's a buy. Okay, so we can see, like from the past, whenever the blue line crosses the red line to the downside, you can see that there is bearish momentum. You can see that the bullish momentum is losing strength and the bearish momentum is gaining. Okay, so this blue line and this red line kind of works like some kind of moving average. Okay, so it is just a double confirmation when you are using the Ichimoku cloud. Okay, so you can see that the blue line crossed the red line again. Here, a trader will enter for the buy. They take profit here when the blue line crosses the red line. Okay, so that's one indicator that I use for trend. The other one, I don't really use this for trend. I use it to look for divergence. Okay, it's the RSI and the stochastics. Okay, I'm going to show you guys what divergence is. Divergence is when on the chart, this is the chart, okay? This is the indicator. These two are indicators, these are charts. On the chart, price is going up, okay? But on the indicator, price is going down, okay? Let's give me a moment. Okay, you need to measure the same, oh, what happened? Okay, you need to measure following the same area that you took this line from. So if you drew this line here, take a vertical line, plot it here. Okay, this is where we, okay, you need to see if price is going up or down. Okay, if price is going down, even though on the chart it is going up, this is RSI. RSI, the indicator's way of telling you that, hey, this trend is not the real trend. This is a fake trend, okay? There is a bearish divergence and there is a chance that price is going to go down and there will be a trend reversal, okay? So I don't really use RSI or stochastics to look for trend. Rather, I try to use it to tell me if there's any warning that the trend is wrong. Okay, so in this case, trend is correct. Okay, I'll show you guys an example where the trend is not correct. Okay, there are cases where price is going down like this. Okay, price is going down. Okay, but on the RSI and the stochastic, price is actually going up. Okay, not just follow the one that I draw. Okay, pretend that price is going up. Okay, if that is happening, this is RSI and stochastics way of telling you, hey, this trend on the chart is a fake trend, okay? There is a chance that price is going up, okay? And that is called a divergence of what truly is happening, okay? So that's all I have for you guys today. I hope you guys learned something. I think trend lines and channels are super, super important. Combine it with support resistance, you are going to get a lot of very good setups. You're going to make a lot of profit. Okay, so do practice on identifying trend lines and your channels, and do practice identifying your support resistance, and it will really help you in your trading. Okay, so I will see you guys again next time. Thanks for attending our webinar today. Bye everyone. Thank you so much. Thank you, Mark. Thank you, Joyce. Thank you, Muhammad. Thank you, Brian. Thank you, Aisha. Thank you, Carlos. Thank you, Joyce. Thank you, Tuan. Thank you, Best. Thank you so much, everyone who joined. I will see you guys again soon, okay? Cheers, everyone. Merry Christmas and Happy New Year.